Ryan Doyle, welcome back to Acquiring Minds.
Thanks, Will. Thanks for having me.
Ryan, you came on the podcast for an episode last June 2022, so about a year and a half ago. You were a searcher at the time, and we discussed 8 signs of a bad business that you had kind of compiled and identified over the course of your search, which was ongoing. But since then, you found a business to buy and have graduated from searcher to owner-operator, and we're going to hear that story today. But Ryan, please start us off with some background on you.
Sure. Thanks, Will. Thanks for having me on, by the way. This was it was great being on before and excited to see you grow. And but yeah, in terms of background for me, a little bit of a finance journeyman, bouncing around in a few different roles on kind of the typical Wall Street finance track. But I think within common vein is I focused on banks. And then essentially when I ultimately got to my dream job, after about 3 years, I decided to blow it up for search.
And why did you just give us a little bit more? That phrasing is interesting. Why did you blow it up? Why were you so drawn to search? Especially given, as you quickly learned, that it was damn hard.
I think ultimately it was really the desire to control my own destiny. So, I think when you're in the corporate world, career track, you're always expecting the best in the next opportunity that comes along. And then, I'd kind of been fortunate enough to reach what was, beyond what I thought I could do in the space. And then I realized that, you're still ultimately going to be a cog in a much larger machine.
Great. And had you had any entrepreneurial dalliances or interests before this recognition that doing W-2 for the rest of your days might not be the way out?
Nothing meaningful. I mean, I had some friends in business school. We'd bounce ideas off each other and, even try to start some things here and there, but nothing that ever really, nothing serious.
All right. And so what year is it that you start your search?
It's 2021.
So when you decide to search, what does that look like? How much knowledge do you already have, if any? Do you hit the books, listen to the pods sort of program? What's that look like?
Yeah. So I think the initial idea had come across my mind when I was traveling back in New York, to and from New York, still working pretty regularly in the office during COVID, and stumbled upon the buy then build everyone talks about, and it
Sure.
just a little bit of a bell went off in my head, and then I realized that I knew some more people in my background that actually had done this before. I just didn't know what it was. It was still kind of early stages. Self-funded search was very early. Not many people were talking about it back then. And so I just started doing a lot of research on that, talking to a lot of people that have done it, spending time, basically just absorbing as much information out there. And since then, there's a lot more out there. But and then going through year end, and my wife and I making like larger decisions of where we're going to live, and ultimately decided that it was really the best time for me to go and try to do something like this.
Okay. And where does that leave you in terms of this decision of where you're going to live? Where were you living? Do you now live, or did you move? What did that look like?
So we're down in Savannah, Georgia. We escaped New York during COVID on a part-time basis down here, renting houses, started as 2 weeks, rolled to months. And then we eventually the lease went up in New York. We put our stuff in storage, and then we were pretty open-minded. So like my search was actually focused coastal Southeast. It was really anywhere we would be happy living. And then after spending some time in Savannah, we really fell in love with it, started planting roots. And, about more than halfway through my search, like really for the last deal I looked at, the one I executed on, we really focused on Savannah because we wanted to make that happen.
Wow. So that's a geographically constrained search, not so uncommon, but Savannah is not an enormous metropolitan area. So that really meant that you were going to have to probably loosen some of your other criteria if you were determined to buy in Savannah.
Right. Yeah. Well, actually, that's what brought me down to where I'm actually, my headquarters is in Brunswick. We have another location down in St. Mary's. But, I basically had exhausted the market in Savannah in a short period of time. I felt like I'd reached out to everybody. And then I just was starting to look for the next, biggest city by demographics, and Brunswick popped up. And started reaching out down there. And then I learned about this whole other market, which is incredible, which is our primary market, the Golden Isles, which is kind of incredible, but not as well known up in the Northeast as it is down here. But, I kind of stumbled into that. But so I'm splitting time between Savannah, Brunswick, and then, also going down to St. Mary's, which is, the southern border of Georgia.
And so the Golden Isles, for people ignorant, what is that?
There's these 3 barrier islands off the coast of Georgia, Sea Island, Jekyll Island, and St. Simon's Island. And they're known for golf. A lot of the professional golfers live there. And it's a beautiful place to live, but very attractive demographics, very affluent.
And well known in the state of Georgia and throughout the probably larger Southeast.
Oh yeah. But I mean, it was unknown to me when I engaged my conversations with the company that I'm now running.
Even though you had settled in Savannah.
Yeah, I didn't even know about it when I was living in Savannah.
Yeah,
I mean, I'd heard occasionally, but I didn't fully appreciate, the market here.
As I teased at the top, you came on and we did 8 signs of a bad business. So you were in a search and you were learning what you didn't want, and probably following a lot of threads only to come up short on a business that you were considering because you uncovered a red flag. So I know that you have one broken deal experience where you came really close. And I think that there's a story there. So why don't you tell that one before we get into the story that ended up being the acquisition you did close? Yeah.
So I think I was certainly challenged during my search process. I had budgeted originally a year, drug on to 2 years, large in part because of this deal, which just could never die, and essentially was a 9-month process. And in terms of red flags, there were multiple, and just when you seem to have resolved one, then another would come up, and then as we approached the end, it became clear that we were just not going to get to. It was basically the day before closing, and ultimately walked away, and that was at year end of 2022.
What kind of business was this? And tell us more about why you were able to get so far. It was an appealing enough business that you came this close to closing, and then what killed it?
Yeah, so it was also in the residential services space, pools, and I liked everything about it. Long operating history. I'm obviously very bullish on the pool space, and this company was had a pretty strong market share. And they were very good at what they did. They've been doing it for a long time. We initially hit it off pretty well with the sellers, and as we progressed along, the more I learned about it, I was very excited. Obviously for for me to continue on that path. But they were of a good size, perfect size. I'd say the business mix was not exactly what I'd wanted. They're a little bit heavier in construction. I'm really highly focused in more recurring based maintenance and service repair. And then they're decent sized retail, but it really fit the mold of what I thought was interesting. We were able to get to a fair price after a long negotiation period. I mean, I was just looking back through my notes, it took us like 4 months to get an executed LOI. And then I thought that, since we had spent so much time on that, the deal process would have been quicker. But we just encountered issue after issue. I guess first, it was one of the first mistakes I'd made was I went with a bank that didn't really do this type of thing. I based it on just a good relationship with the loan salesperson, came down, met with the credit team, felt like they understood what I was trying to do, supportive. And that process, like the whole approval, everything like that was pretty smooth. But I think, not to speculate, but, it was also during the period where rates had kind of really shifted, and I had locked in a pretty good rate, so maybe it had something to do with it. But they started introducing all these little challenges, which would take weeks to solve. So, for example, I think initially one of them was, and I've learned this now as I've gone through the deal that I've closed on, but, SBA requires, I believe it's vehicles that are over, there's like a threshold, like $10,000 of value before you have to get titled. So this company had 20 plus vehicles. And so this bank wanted to have titles on all of them. And none of them were over that value. They were all, beaters, which is very common in the space. And, these titles for whatever, basically everything, all the names on them had one minor issue with it, and instead of ampersand, S, since, when there shouldn't have been an S there for plural. And so we had spent like days, and literally 2 days in the DMV retitling all these titles. This was when we were supposed to close the first time. And then, then they had to get shipped to Georgia and come back. And that took another 2 weeks. So we delayed the close the first time because of that. And then meanwhile, another issue sprung up where, they had a exclusive agreement with their primary supplier, which the bank and bank's counsel had thought that kind of fell into the franchise category, which we immediately kind of debunked. But we had gone through that whole process. Everything we had said, they took basically 3 weeks to agree to. But again, that delayed the close. And then meanwhile, this is really the underlying issue that really started to come to the surface, which was the financials kept on getting better and better, almost to like a scary, unreasonable level where gross margins were just like exploding out. And, it just, I was getting less and less comfortable with it, ironically.
Well, it's funny that because from our first episode, one of the 8 red flags that you identify is stupid margins or stupid good margins or something. Like it should be, if a small business's margins are too good, that's not a positive. In fact, it's a negative sign. And so you were seeing actually this play out. What was going on?
Yeah. So, and it's funny now because during the time I was very frustrated. I was like, how can they not understand this? Like they must be obscuring it. And now, like as being a small business owner, I could kind of see how this could happen. But essentially, what was going on is their gross margins were growing pretty rapidly, and initially it was a little bit of a red herring. That this was another thing that we kind of ran to ground with the bank, and something I wanted to get comfortable with. But part of that construction division had the way that they took their deposits. That was obviously they were recognizing a cash revenue. So it was inflating the revenue side of things, but we ultimately got comfortable with that, given that the growth had kind of stabilized over the last couple of years, and we ran some numbers on that, haircut the margin. We got comfortable with that part of it. Then on the cost of goods sold side, what they were doing, again, I don't think is that uncommon, is essentially it was a formula of total purchases minus changes in inventory. So inventory was growing. Which was also not, it was reasonable that inventory was growing because a lot of pool companies were stocking up, post shortage, and there's, retail was exploding all over the industry. And so inventory was growing. So there was a negative adjustment to cost of goods sold. And then what had happened was, I had hired somebody to help with the diligence side of things. And, one of the things which I definitely would suggest to all the searchers to do, this was a big lesson learned for me, was just get a good QOV. I know, I'm sure you guys have, I know you've covered this well on your show, but essentially, like I had high level of confidence in what I could do on the finance side of things and accounting and whatnot. But having an objective third party there, that's like, I was able to do that in my next deal, and it just saves you so much stress and time. But in this case, instead of hiring a QOV provider, I hired somebody that was more focused on inventory audit because there was a big portion of inventory here. And so part of that was, and this is a simple thing that all searchers should do, but you'd ask the seller to send a email to your suppliers, basically saying you're reconciling your accounts payable and want to know what their AR is, or accounts receivable. And they'll respond back. And the response we got back from that big supplier was exactly what they had on their balance sheet. But I'd remembered from a meeting, weeks before, that there was at the very bottom of the sheet, there was a small dollar amount, but it was basically labeled unbilled inventory. And so I was like, what's unbilled inventory? And, how come that's not reflected in what the supplier says you owe them? And then it was like pulling a thread, because ultimately we found out that the supplier had some serious issues with invoicing, and then the company's policy in terms of accounting was they weren't going to book the expense or the payable until they received the invoice. So they were booking the inventory, and so you had that negative adjustment on cost of goods sold, but there was really no associated expense with it, or even tracking or understanding of what the debt was outstanding. And then the other fatal flaw I made, I think, with a few exceptions, is it was structured as a stock deal for that was part of that 3-month negotiation for the sellers. They were basically doing a QSPS, so it was highly tax advantageous for them to do a stock deal and to get to the value that they wanted. And for a lot of other negotiation points, basically conceded on doing a stock deal structured as an asset deal in terms of like indemnification claims and whatnot. So anyway, the point was that I was assuming those liabilities unknown, and they didn't even know what it was. And then also there's a big component of working capital, another big lesson learned here.
You felt pretty confident that you could scrutinize the books yourself, but in fact, you're advocating that the audience get a Q of E professionally done. So do you feel like a Q of E would have caught this earlier than you did catch it? I can't tell if you're blaming yourself in a way that and a Q of E provider would have caught this sooner or what? What's the takeaway?
It's more from the perspective of I definitely spent way too much time and stress on it. I don't even know if your run-of-the-mill Q of E provider would have found it. But having that objective third party to bounce ideas off of would have saved me so much time trying to run this down, because you can raise it and they will give you kind of a clear answer on it. Whereas you can go to your very smart friends or investors, family, and it's very hard to get an objective answer. Certainly one that would make you feel either more comfortable with the situation. So it was almost like having a therapist for me on the financials, where I think it's because my ability to go in deep into financial numbers and spend hours in it, it was better to have someone where I was like, okay, I'll just focus on really some of the other important issues on the second deal.
Okay. And did you choose not to do it on your first deal just because you were trying to save the money? Or you just wanted to own it because you thought you could do it, so you kind of wanted to own it. You wanted to have your hands in that particular.
I know better to cut corners on professional, but I think it was also a function of I couldn't find one that I really thought I was going to get the value out of it. I was like, okay, it's just a proof of cash and quality of earnings. I could do that in a weekend, but and then I just wasn't impressed with the people I'd met at that point. So yeah, I just decided to go on my own. And then my other thought too, rationalizing, was I'll spend it elsewhere. I'll spend the money on, making sure we get the right attorney, get the right inventory audit going, and all that sort of stuff.
Okay. And then you mentioned that they wanted to do a stock deal. It was going to be tax advantageous for the sellers to do a stock deal, which is not uncommon. And that even though this deal didn't close, you were able to structure something where it was a stock deal, formally a stock deal, giving them the advantage that they wanted, but actually protected you. Because, of course, the reason that buyers don't like stock deals is because then you're buying the whole entity, and all the liabilities typically follow that entity, stick to that entity when you become the owner of it. But you put understandings or legal clauses in place to protect you from those liabilities. And so tell us more, and if you were able to just do that, why isn't that what we all do, what everybody does?
Yeah, and I think it's one of those things where people could be quick to tweet or make a thread about it and how it's a great workaround. But I think the reality is when you're about to sit down at the closing table and that you're going to have to make an indemnity claim or some type of offset to an escrow or a seller note, because escrows are not really SBA friendly. There's going to be litigation, right? It's just, and so I felt confident with our draft, our purchase agreement draft. I felt like we were well protected. It's just whether or not you want to go into a small business acquisition when the businesses are so small, fragile, and then have to deal with litigation, and it's just a huge distraction. And so I think it, like, in theory it works, but I think in practice, when you get to that point, you have to be kind of real with the mechanics of are you truly protected from, being pulled away from your business in the first 3 months for, days, days of every, weeks at a time, right? It's when things are the most fragile. So that's ultimately why I walked away. It wasn't that I didn't think that we had the structure in place, and the valuation still worked. The bank was still on board. It just was like, I knew that I knew inventory was off. I knew the liability wasn't fully defined. So I knew there was going to be some dispute down the road. And to me, I just didn't want to take that risk.
And so when you talk about having protections in place with respect to buying a stock sale versus an asset sale, it still means that the protections are in place, but you're going to have to litigate them. Versus if it's a pure asset sale, like most of my guests, it's cleaner and you're protected without having to be litigious.
Right.
You're kind of protected by default.
Yeah. Like, I mean, for example, I already had a minor, the business that I bought currently. I mean, and I couldn't imagine in construction, but I've already had like a claim tried to be made on me for, like a relatively minor construction project that was done. And it's just as simple as like, look, this is not even my entity. Like, you're barking up the wrong tree. Whereas in a stock sale, you'd have to potentially fight it and then, take it out of the seller note. And then the seller would have to sue you for that if they don't believe it. And then
Gotcha.
You would have to, you're paying a lot of lawyers at that point.
Gotcha. Okay. Great clarification. Thank you. Okay. All right. Well then, so yeah, despite putting these limitations in place, you game it out like you just did with us right now. And you conclude that I'm not going to buy a business where I basically know I'm going to have to litigate in 3 to 6 months after I buy it. And so you walk.
Yeah, essentially. It was a very tough decision, but yeah.
Yeah. Yeah. Is there anything there to be said in terms of this tough decision about kind of the discipline or the emotional wherewithal to do that? Because sunk cost fallacy sort of thing, like the closer you get to closing day, the harder it is to extract yourself from the deal. Anything kind of emotional, psychological you can share with the audience about that, about finding the discipline, self-discipline to walk?
Yeah, I wish I could give some concise advice on that. I know, like, essentially you go through all these different mental gymnastics of, okay, well, if I just get the deal closed, I have confidence in myself to make it work. There's the fact that it's coming up on 2 years, there's, self-doubt on the whole search process at that point. You're beginning to think whether or not you're going to, and then the concept of going back to search is also daunting because search is miserable. And so, you're really at this point where, there's all these other, just unpleasant, things that are you're gonna have to face once you kill a deal. And so part of that is, you have to try to think objectively about it. But, that said, like, I did have the discipline to walk away, but at the same time, it probably should have died when I first discovered it, like in September versus year end when it did.
Yeah. And in retrospect, do you basically feel like you made the right decision? And anything else that you've learned or anything since then that you reflect back on and is yet another lens to see that whole experience through?
100%. It was, and I think I've mentioned it. Yeah, I mean, there were tremendous amount of broken deal costs on it. It was probably higher than anyone would have expected. And I've talked to searchers that have, had that, disappointment. And I think it's the best money that was ever spent. So I walked away from that. I was able to close, basically get from reach out point to when I first did a cold outreach to my seller to close, it was, 4 months. And, I had all my lessons learned. I knowing what I know now as an operator in my current business, I know that deal would have put us in a really bad spot financially. It would have been financially disastrous for me, I think. And so without having walked away from that, obviously, I wouldn't have been able to go back out, dust myself off. And then, I love the market we're in. I love the business we're running, the people there. Almost every single characteristic about the business I have right now is better than the one I was looking at before. And, it's a little bit of luck, but, if I tried to force that, then, I would have never found what I'm at right now.
Well, great, Ryan. I'm happy for you. So you do kill the deal. You find that self-discipline and you park yourself back in front of your computer to start back up your engine of search. Tell us how you found the business that you did. Bye.
So I mentioned I was basically running out of real leads in Savannah. And so I just thought I would check the next city. Going north was a little bit picked over. Private equities all in kind of that South Carolina coast area. And so I was just like, well, let's go south. And so I made my promise to myself and to my wife. I was like, this will be the last batch. And so I sent out a batch of letters, and then I did an email campaign, and then this seller hit. So it was really in and around that area, probably all the way down to Jacksonville, if I remember correctly. But it was a little bit of a fishing expedition, but numbers game worked out.
And how many months into your search were you at this point?
Full 2 years. So essentially,
full 2 years.
Yeah.
And so you were going to call it a day, stop your search, go get a W-2. If this last batch didn't work out, you'd agreed as much with yourself and with your wife.
Yes. And I mean, meanwhile too, I mentioned that, I'd focused on this, the bank space, financial institutions. And then there was a little bit, I don't know if you remember, but there was a little bit of a banking crisis going on there. So there was some opportunity there for me to, I'm passionate about that space. So I was like, well, maybe I do go back like this, and so it was pulling me there. And if this deal didn't happen, or if that batch of emails didn't yield this one lead, then I'd probably be back where I was.
And to be clear, the banking crisis that you're referring to meant good work for you, meant potentially good work for you because it's your area of expertise. So what, you receive you send out letters and you get a call. What does it look like when you got the fish on the hook?
We started immediately, in-person meetings, term sheet. He wanted to close May 1st, which our interests were aligned there. And so, fortunately I had, the playbook and was able to really just progress things pretty quickly. So we went pretty quickly under LOI, had already lined up relationships with lenders and started that whole process. And then, so May 1st close.
Mm-hmm. May 1st of this year. So you're 7 months in at this point.
Yep.
And what can you tell us about the business? You've already said that it's in the pool space, but tell us more, please, about what this business does, where it services. You've teased that also, size, et cetera.
Yeah. So I'm a little biased, but I think we're the best at what we do in our markets, which are, like I mentioned, they're pretty high affluent, high demand, or demanding customers in that market. But we, it's kind of similar to the Goldman thesis. We price at a premium because we provide premium service, and because of that, we're able to pay our people better. And but yeah, we're focused mostly in maintenance and service, and we do retail. And I'd say on the retail side, it is primarily focused, our mix is towards commercial. So we're pretty big in bulk chlorine sales and delivery for a lot of the resorts and some of the local power washers, things like that. So for me, like what I found.
When you say retail, what does that mean? Just selling chlorine, but literally from a brick and mortar location?
Yeah, so we have 2 brick and mortar locations that we sell. It's mostly chemicals, it's a little bit different than most of your pool supply stores, where there's a little bit more of a mix with spa and other recreational grills and things like that. We're heavily weighted towards which I like is like the non-discretionary goods of chemicals that the pool requires no matter what.
And so you said that you're servicing commercial clients from those brick and mortar, but also consumers?
Yes. Yeah. But in terms of mix, and also because of the volume, but yeah, it's heavily weighted towards more commercial. Again, power washers coming and buying liquid chlorine. We're probably one of the biggest liquid chlorine sailors in the area. And then the resorts, they can't really store chemicals on premise. So we do delivery, bulk delivery. And then a lot of them will come in, in a pinch and emergency, and then they'll buy from the store on account with us.
Well, you may have just answered my next question, but it seems a little unusual that you would service commercial clients through a retail operation. I would just imagine there's kind of more of a distribution or delivery. You did just say that you do some delivery relationship there, or they just pick up the phone and call you wherever you might be and say, we need this, and swing by the warehouse or something. I'm not imagining commercial clients walking into a retail establishment to buy stuff. Maybe I'm just wrong about that, but I think of retail as targeting end consumers, homeowners in your case.
Yeah. I mean, I understand your confusion on it, because it was a little bit surprising to me as well, but essentially I think it kind of stems from the history there where, we were at one point, big on making sure we have all the right parts. So we have a lot of pool contractors, a lot of our smaller, which I think is going to be an interesting acquisition funnel for me, but a lot of the smaller, like single pole operations, single truck operations come and buy liquid chlorine from us. And since we deal in so much volume, we're able to pretty much offer the best pricing on that. So, you'd be surprised. It's a lot of the smaller operations, mom and pop. And then, the resorts is more deliveries, but they do come in, again, when there's an emergency. And then it's usually when there's people, when they have a facilities manager that actually knows their way around equipment, then they'll come in and buy parts. Will buy like equipment that they can install, but generally speaking, that is all mostly done on site, including the delivery and the repair. I
guess an analogy might be like a paint store. There's one in my family, and like a lot of paint stores often serve not just homeowners who want to paint their living room, but actual professional painters and paint crews. So a lot of their business is actually just commercial, as in your case. Okay, I sidetracked us a little bit. Was there more to say about the business? Could you give us a sense of size and history?
Sure. So I'd say it was call it low single digit million revenue. We had pretty attractive EBITDA margins, but still kind of sub 1 million EBITDA. We have 20 employees, 20 trucks, 2 locations. Hopefully that gives you a little bit of size. And
so did you consider that kind of right in the sweet spot of what you were looking for size-wise, or a little low, a little high? Like, how close to the bullseye was this?
Actually, it was a little bit on the low side for me, but it kind of met the bottom range part of my size threshold. But yeah, everyone that, after searching for 2 years, I mean, there's just everyone, and I agree with it. It's, you want to be really above 1 million EBITDA. It's just, there's a lot of advantages to that, in terms of, stability, ability to offset cost, scale. It's a little bit subscale, and that's, where I'm at right now, which I think is really what I'm most excited about.
I definitely want to return to that. The question of size, of course, is always an interesting one, and as you said, you're living it. Was there, before we get into your ownership and your operations and scale versus subscale, is there anything more to say about the transaction? Any takeaways from that experience? You were making it sound pretty easy, pretty smooth, I should say.
Yeah, I'm trying to even think if there were any issues that had come up. I'd say it was, of all the deals that I'd looked at or have gotten close on, I think it was also benefited by the seller, who was just very he was very, he expedited everything along. Like every request I'd gotten was flipped right back to me. I think there's 2 different types of sellers where you send diligence requests in batches and may overwhelm them. So you might break it up into bite-sized chunks. He was on the other end of the spectrum where he wanted everything right away and he would turn it quickly. So that kind of really helped facilitate the process.
Yeah. And so that sounds great. To be clear, this was a proprietarily sourced deal.
Yep. Yeah.
So interesting that he was so responsive, and because part of the lack of responsiveness that sellers are often known for is that they're busy operating their businesses. And so if you do get a seller who's pretty responsive, often that can be because they've already done a lot of preparation in advance. They prepared their business for sale, basically. Maybe their brokers leaned on them to do that. Maybe they've just had the foresight to do it themselves. So interesting that you were able to proprietarily source a deal and that the person was organized enough and responsive enough to just be flipping you back information. It's an observation.
Yeah, no, on that point, and actually this is a little bit of a unique advantage I had on this. He'd run a process in the past, so he didn't know what to expect. And because he was still under some type of draconian agreement with the broker, he did not want to re-engage with that buyer. And so he'd basically came in a competitive with price, but then, not having to pay whatever the ridiculous broker fees are nowadays, like double-digit percentage fees. I decided to move forward with me.
Ah, okay. All right. So he had his own broken deal, but for which he had prepared for and was pretty organized. And that had been, sounds like relatively recent.
It was about 2 years prior, I believe.
And anything to say about the terms of the deal? Was it pretty much in line with market? Anything to say about that? It sounds like a really attractive business, maintenance, recurring, high-end clients. So I would imagine, and sizable, like you said, maybe not at the $1 million SDE level that everybody wants, but maybe approaching that. So I would imagine that it could command a slightly higher multiple than what we typically hear.
I'd say it was like right down the fairway of what you would, what you hear, like our reasonable multiples for this size. So I mean, it was, and it was pretty vanilla in terms of asset purchase agreement. Really no unique circumstances. There were like a few assets that were clearly kind of personal that, we carved out, but other than that, it was pretty straightforward.
Well, as you said, the fact that the seller was not going to use a broker this time meant that he maybe didn't feel like he needed to squeeze the multiple as high as he could get it. Well, great. So let's shift into your ownership of the business and what that's been like. I know there have been a couple of challenges. Why don't you tell us about one or two of them?
Okay. Yeah. Well, I guess the biggest one is post-close. So part of the seller's ability to turn this information so quickly was he had a very diligent bookkeeper who would be an employee of the business going forward, and which I was excited about. And then post-close, quickly discovered day one that effectively she was really the general manager, and not only that, but like everything went through her. So the seller actually was taking more of a strategic, he'd step away from the business. That was another, consideration for his sale. It was for health reasons, over a year ago. And so she was running everything. And so initially I was like, this is fantastic. Like I'm going to go in here and get to, just get to know the employees, get to know the customers, redesign the logo. It was just like, okay, look, this is great. Like I'm going to actually have a GM day one, and then trying to align her interests and just really blow this thing up. Look for acquisitions immediately. And then, I guess when did things really start to get so what happened was about 3-4 weeks in. So another thing too was they were very good initially at, they'd started the whole transition process about like a week leading into close. So transferring all the books, all the accounts. She was opening all these accounts, for me during, right leading into close while we were finalizing all the documents and closing the loan, et cetera. And so, seems like it was too good to be true. And then, so about 3 weeks in, I started pressing for some, data, some information. I wanted to see some financials, rough cuts, like trying to see where we were tracking post close. And, I was kind of always getting the runaround. I was like, okay, we're on QuickBooks Desktop, which was a disaster, and that, I couldn't even get into my books. And then, then I finally got that first cut of financials, and I was like, this that was like my heart dropped because it basically showed that we were down like 70%, which I was like, the banker in me was like, this is wrong. So I didn't panic too much, but I was like, this is wrong. I just need to understand why. And so I started pressing her for the login event. And basically she was going on vacation for a couple of days. And I said, okay, like before you leave, I just need all the login information. And then, so she left and then never came back. And
wow.
So about 2 days, after a day, and things had gotten a little bit, tense, but I thought that might have just been like, fatigue from the deal. And, I think it was kind of chunked up to a little bit of personality, but, so when she'd left, I was like, after a day, I was like, I don't think she's coming back. And she wasn't answering calls or answering texts. And then, after 3 days, our policy is like effectively resignation. And so I was like, okay, I got to figure all this out. And so I walk in her office, which is now my office, and it's just stacks of papers everywhere. I'm logging into all these accounts for the first time. And I have no idea how, like, because they have a very well-defined machine, of processes, but they've been developed over 20 years and they're all like paper driven. There's a reason why they do everything, but it's not as you'd expect. And so like simple things like you'd think like a business, like invoicing, right? The way that we price, we do, for example, it's not flat rate. We charge our maintenance customers visits plus chems. So the invoices are complex. Also, since we changed over a lot of the systems, they weren't talking to each other. And so a lot of specifically invoices were getting like stuck. And I knew she was getting frustrated with it, but I didn't even know where it was or what the extent was. And so that was kind of my first attention was like, okay, I got to get these invoices out because we basically had a month of invoices piled up and they weren't even syncing to our QuickBooks to send out those invoices. And then meanwhile, I didn't have any real terms with my suppliers. It was all like practically cash on delivery because, I just had closed and now we've developed a little bit better terms. But at the time it was like, this is really running towards a liquidity crunch. And then just as I thought I was starting to get the hang of invoicing and QuickBooks, this is like, a few days in, a week in of me sitting in that chair, I get locked out. It's like a 2-step verification that goes to a phone that is hers that was not answering. And so basically that was at that point, it was a little bit of a panic mode because I hadn't gotten any invoices out. Like I said, there's hundreds and hundreds of thousands of dollars that are just stuck. And then meanwhile too, as like the longer you wait on getting invoices out, it's harder to collect. And so I really had this like moment of panic. And then meanwhile, I still had no idea how any of the systems are working. I was just like, my only goal was getting out invoices at this point. So, and
Ryan, the people at the business at this point, so she was kind of a de facto GM. Under her or aside from her, is everybody just crew? Is it just basically you in the office and remaining you in the office and just crews? Do you have any support is what I'm asking.
Now I have, I'd call like 3 key employees that are fantastic. And they were 2 of them were there during that time, but it was so early and, they were very anxious about the deal. They didn't know me or, they didn't know that they didn't have the like level of confidence in me. And so, I couldn't go to them necessarily. And by the way, they were so shielded because again, everything was going through her that they didn't even know how to do these things. So no one knew how to do it regardless. She was like,
yeah.
So, and then meanwhile too, I certainly wanted to kind of keep a confident, face on all of this throughout this process. So yeah, it was at that point I was like, okay, this is the nightmare that all the, you hear the horror stories you hear of the searchers. And so, yeah.
So how do you hack into your own accounts?
I didn't hack. I had to file like all these forms, with everyone from, the QuickBooks Intuit to, our point of sale, QuickBooks point of sale to our 401k. So I basically had to file these like proof of ownership paperwork. I probably spent like 4 days on just in the perpetual support hotline of Intuit. It got to the point where I was ready to I was going to call an old boss to try to get an intro to senior management into it to try to get this thing unlocked, because they would just send you in an endless loop. And then even though when you submit all that paperwork,
I can only imagine.
Oh man, it was. And then even then, when you submit all your paperwork, it's like, oh yeah, they default to, they think you're trying to commit fraud. And so I understand a little bit of, the security around it, but at the same time, I had everything that I needed to prove that it was my business. And, you still got to go through all the red tape to get it done. So it probably took 7 to 10 days to get that open. And then meanwhile, I had immediately hired an external bookkeeper to help. And this didn't really help the situation, this particular situation. I do like working with them, but they were like, okay, you got to get off QuickBooks Desktop. We can't help you until you get off online. So we were trying to basically migrate from desktop, which had just been migrated over, into online. And then meanwhile, that was this whole migration process. And, we were having that issue with those invoices not syncing. Well, that got multiplied because when we went to online, our CRM system effectively didn't connect with that. And so, there was basically I was kind of dual tracking, getting access to QuickBooks, but at the same time, I knew it wasn't even going to work when I was able to get into the online version. So we basically had we had an online version that had nothing populated in it that I started invoicing out of to just try to get some cash flow. But, it was scary.
Well, in 7 to 10 days of lost, basically, income, not lost income, but deferred income, when the whole precipitation of you looking into it was because you're starting to notice your working capital dwindle anyway. And then the dwindling accelerates right as you try to fix it. That must have just been terrifying. And so this kind of just stopgap of just trying to issue some invoices out of your new QuickBooks instance, did that bring in a little money?
Yeah. So actually what I think my saving grace, well, two things. One, I would just say the only way I was able to sleep at night was that I had a decent sized line of credit. So I knew, and the business was still going strong, and we were in the busy season too. I think, maybe if it was during the slow season, it would also have been scary. But, the business was booming. It was heat of the summer. And I had the line to fall back on, which fortunately I never had to tap. But, what was the saving grace was I was calling all my friends, anyone that was in between jobs or, just come down and help me, help me. Cause again, I didn't know any of the processes. It was help me figure out what this stack of paper means. And,
Wow.
Everyone's got their own lives and my age, kids and everything like that. So actually I'd hired an intern when I first started searching. I guess it was summer 2021. And I didn't even know what I was doing at that point, searching, because it was so fresh. And that evolved into me just coaching him on his career. We kept in touch. And so I reached out to him. I was a total flyer. I was like, what are you doing this summer? And he's like, I'm working in the kitchen. And I was like, you got to help me. And he was like, he drove down that weekend. I got a little choked up about it because it was, drove down that weekend, only expecting to stay there the weekend. And then he got so invested in it that he stayed for the whole summer. And we just
Wow.
war roomed it out.
That's amazing, man.
Yeah.
Well, also probably a testament to how much he appreciated the kind of internship evolving into career counseling that you had, given him 2 years earlier.
Yeah, it was awesome because and he's still in payroll. He's helping out remotely. But yeah, it was a lifesaver because and then also just having someone there that you could kind of, again, sounding board, therapist, objective third party, to help you think through as you're staring at the abyss, how we're going to get through this.
By the way, if he was the reason you guys met is because you had hired him as an intern for your search. He must have had an interest in search. He sees into your acquisition 2 years later, and he probably never will want to search again. Right?
No, he's genuine. Well, the reason why I hired him too, he actually read all the search books as a sophomore. which is really impressive. He's really genuinely curious in it, but I've been mentoring him to get into his investment banking path, and I've been supportive of him making that next jump. So, now that he's got a full-time offer there, we'll see. Like, he's going to probably help me out this summer, and maybe it comes back in a couple of years after 2 years of pain and misery that banking is.
What's his name?
Carter Gossett.
Cool. Well, thank you, Carter. And so you and Carter spend weeks and longer, basically piece of paper by piece of paper, working down these stacks in the office and kind of reverse engineering the whole back office of this business. And do you succeed? By the end of it, do you feel like you got your arms around the thing?
Yeah. We got things kind of under control. I'd say by like by mid-July, we had like basically full access. We were still learning like processes, but we basically had unlocked everything, had gotten all those invoices caught up, and we're beginning to start like, okay, thinking about where we can improve some of the processes.
And what of the bookkeeper? Just any closing of the loop there, or did she just truly ghost and remains a ghost?
Truly ghost.
Wow.
Nothing. I mean, I haven't followed up. But yeah.
And I assume when it was really hitting the fan, you're calling your seller and saying, why is so-and-so not being responsive? Like, what did your seller at all give you any kind of throw you a line or do anything helpful here? You'd think that they would be able to do something helpful.
Yeah. I mean, I think, so from his perspective, he relied on her so much. He didn't really understand what she was doing in there. So like from like her pure practical sense, like he couldn't help me with some of the stuff we're trying to go through. Not very, self-described, not very tech savvy. But apparently she had ghosted him as well. So, it's, and then meanwhile too, obviously as you're going through this, you can't help but speculate, like, is there like fraud going on, right? Or whatever,
exactly.
And so you're in the you like have to kind of fight that because there's, immediate crisis that you're dealing with in terms of just getting access to your books and getting invoiced out. But, there's that always in the back of your mind. And then, how big is it? Yada, yada, yada. But, I think it's safe to say that if there was anything, it wasn't material. I'm still kind of digging into things, but going through that whole process too, obviously, like I had to get in the weeds and haven't really discovered anything there.
But yeah, that of course would be conclusion number one, that the second you ask to really look at the books, the person in charge of the book skips town. It's a bit of a tell.
Exactly.
All right. Well, let's talk about the pool business a little bit here, Ryan. Well, actually, let me ask a bigger picture home services question. So you have said now a couple times, you've made clear that your target market is basically higher end homes. You're in the Golden Isles area, which is this really fancy, famous golfer area of Georgia, off the coast of Georgia. And so that allows you to charge premium prices, which allows you to pay your people more, which allows you to have higher quality people. It allows you to provide better service. There's just all these happy knock-on effects when you charge more premium prices. So that's a kind of an example from the world of pools. Do you think that it's fair to extrapolate that pattern to anything in home services? So for the searcher out there who might be considering any of the 10 home services that exist, that they should think about that as kind of a strategically appealing to go higher end. I'm answering my own question. Of course, higher end is always better in everything.
Yeah, I mean, I think it's always helpful to have a strong and growing market. I think the customer base that we have, I guess I could describe it like there's a high percentage of our checks that we get that are just from like family trusts or, the third generation homes. They all have like, their own everything. Like they almost have their own corporate function. So it's almost like a B2B in a way for a lot of these customers.
Wow.
And then, So that's great. And then, obviously don't have, and they care about the quality, right? So they're not going to beat you up on a equipment install, saying they bought it on the internet for whatever price. Like, they just want it done right. They want it done before their grandkids are in for the holiday. And, that's why we're there. And so they're not, you don't have to deal with that. You don't have to deal with any sort of, accounts receivable issues. Now, that said, like, we are B2C. So there is, we do deal with like what other residential services businesses challenges on that side of things, difficult customers, difficult to please, difficult to collect. But I'd say I have that less than most. And then I'd say residential services are not all like created equal, even within the same industry. It really boils down to, what level is recurring, reoccurring, and project based. I don't recommend really any searcher that doesn't have like direct project based experience in that industry going too heavy into that. I've just seen it from other searchers. I've seen deals that have passed on, unfortunately, that are having issues there. But yeah, I mean, at the end of the day, you really want, like, I love my maintenance. I love all of my departments, but I love my maintenance division because I know exactly what it's going to be every month. Service, it can be lumpy, but it is non-discretionary by nature. So on average, it kind of is usually around the same place. And then retail, retail in general in pool industry is struggling. But since we focus mostly on non-discretionary goods, it's probably a little bit more stable than most. But, that's how I think about it. So like, and then when, there's no secret that private equity has been all over residential service space. I think they are starting to go into pools for that reason. I think it's the one place, or one of the least focused areas for the last 15 years relative to like pest control, landscaping, etc. So like, yeah, I think pest control is a great business if you can find a good one at a reasonable price. Problem is a lot of them are picked over, and then you might have to go subscale, or there's a reason why they haven't sold to the big players in the space or platform, private equity backed platform.
Couple things there. Just to be clear with the way you broke down your business, maintenance, service, and retail. So maintenance would be pool routes. So you want guys in your crew show up to houses on a regular basis, whatever, once a week, once every 2 weeks, I don't know what it is, to clean the pool and make sure the equipment, whatever, pour the chlorine, just maintain. And that's pure, true recurring revenue. And then services, something breaks, you get a call, one of your crew goes out and fixes it. So that's less predictable, lumpier, although pools are breaking regularly. So it's not it's not lumpy like project based. I mean, there's kind of a steady stream of calls coming in, and then retail is what we discussed already earlier. And so the pie chart of those three buckets of your business, what does that look like?
It's about
revenue wise,
40, 20 of maintenance, service, and retail.
And so you just said it, but let's hear a little bit more on recurring versus project, maintenance versus project. First of all, in the pool world, a project-based business would be what? Building pools, pool construction?
Yeah, exactly. That's how I would define it. I mean, yeah, exactly.
It's funny. I mean, doesn't Brent Beshore have a pool building business? Like, there are cases of pool building businesses being wildly successful. But anyway, Brent Beshore is also in a class of his own.
For the record, I love the concept of pool construction. I just think from a business side of things, there's a reason why, maintenance businesses at scale trade high single digit, double digit EBITDA, and construction, you could have, 20 million EBITDA business trade like 2 to 3 times. It's because, I could stop marketing. Actually, I haven't even spent money in marketing yet, but I can stop marketing tomorrow and my maintenance business will continue. You stop marketing construction, you work through your pipeline. That's it. Also, there's challenges, just huge amounts of headaches. It always looks great on paper. Projects always get delayed. There's always issues. There's all these unforeseen liabilities that come up. 3 years later, someone could try to sue you for a cracked concrete. It's a headache. But yeah, I mean, I also believe I have a close friend, whom I want to introduce you to, by the way, that owns a pool business that's, closer to 50% construction, high end. And the thesis there is you build the pools and then you maintain them. So it's a little bit of a funnel into the maintenance business. And I did think about that for landscaping when I was focused on that space for a bit. But so there are merits to it. Don't get me wrong, but I'm happy that I don't do any real construction. We do some renovation work, which we sub out, but we've been really focused on trying to dial in maintenance and service going into next season before we take any big projects like that on.
And zooming out, regardless of just pool or whatever particular industry, but project revenue, lumpy project revenue versus recurring revenue, maintenance revenue. Did you feel in your cash flow crunch terror when the bookkeeper ghosted you? Like that must have been such a moment where you were like, oh my God, I love recurring revenue because I guess I should ask, like the recurring revenue, do you also have to invoice for that or is it all set on credit card?
Yeah. So like one of the things that I'm working on right now is I think one of the reasons why our margins are so good, so it's a little bit of a double-edged sword, but we're unique in how we price and offer our services. So we offer our customers the option of doing weekly service, bi-weekly, twice a month, or monthly. And then we do plus chemicals. So for example, our weekly service will, might change, so don't quote me on this, but $55 per visit plus chemicals. So it allows us to, always protect our margins on the chemical side of things. And then typically those do average to like what you would be a higher all-in cost for the consumer than like your flat rate, where a flat rate, the argument against that is, the quality is not always there. They're putting in just what's needed. And so, but the challenge from the business side of things is we have more seasonality in our business. So whereas a flat rate provider will have their margins squeezed in the summer because they're putting more chems in the pool, we're protected on that. But what happens is, both our consumable sales, the chemical sales, and then also the frequency, we have people that will downgrade from weekly to bi-weekly in the winter. And so, we have a little bit more seasonality. And then also because of all those changes and really more of the processes that were in place when I took over, there was never really a focus on auto pay and getting payment information. And so, like we had like a large percentage of our customers were still getting mailed invoices. So yes, I was comforted by the fact that I knew, approximately what we were going to get in maintenance. But at the same time too, like it made the invoicing side of things like that much more daunting because it was like all these different service offerings and all these different line items for chemicals and et cetera.
Great, Ryan. Thank you for that. Well, we're going to start wrapping up here, but I want to give you a little bit more space to talk about the size of business that you bought. You touched on it earlier, and I feel like everything that we've heard about your ownership is kind of like prove the point, demonstrated the point. But you didn't buy a tiny business. You didn't buy small, let's say. You did, but you also didn't buy quite at that $1 million SDE number that is really the ideal. So talk to me about how now being inside such a business, you really appreciate like how in fact appealing it would have been to be able to find a business with $1 million of SDE. Was it basically just because like $1 million of SDE suggests more people, more management layer? There would have been somebody other than a lone bookkeeper who could completely sabotage your business, that sort of thing? Or are there other things?
I'd say that's one of the main factors of it. I mean, you have more of a management structure in place where, the roles are, you lose somebody, it's not the entire department. And conversely, when you hire, you can absorb those costs more easily. Whereas, it takes a bigger percentage of your margin away when just making one or two hires. I mean, there's a great example too within the pool space where I'm sure you get this in other residential services, but our crews, for example, like if we're running, just say 10 guys, right, and they're each doing about 10 pools a day, one calls out, those 10 pools get equally distributed amongst the remaining techs. And what happened, this happened in the summer too, which is another thing that, is a challenge, but we're going to try to correct it next year. But as that number of guys start to become less reliable or at risk or flight risk, those pools that need to get distributed across the team, it gets more burdensome. And so like when you go from, you have 7 guys all of a sudden, and then one calls out, then all of a sudden 2 people are getting 2 more pools on top of, busy season. So like, my friend that has a much larger business, they don't feel when people call out. They have, it just, maybe one guy might pick up a pool or, maybe one pool here or there, but it gets magnified by that. Sorry.
Yeah. Going back a couple steps here, but I wanted to call out something that I was reminded of about the pool business in particular, because it does feel like, I guess you could say this about all home services, but it does feel like pool routes are something where margin would be competed away. The barriers to entry are very low. There's a lot less training in this particular home service business than there would be required of plumbers or HVAC or electrical, certainly. And they're appealing businesses to accumulate routes. So I heard you refer to a one polar, which was a term that Ben Bortner had also talked about in his episode. Ben bought a pool maintenance business in Key West. And actually, Ben talks about the fact that in Key West, he had something of kind of a geographic moat there because Key West is so inaccessible, so hard to get to. And had he been on the mainland, just 3 hours north in Miami, the business would have been totally unappealing. It would have been, the margins would have been razor thin. The competition would have been very stiff. But on Key West, he was able to basically have some pricing power because it's kind of just a much smaller market that's harder for anybody to just crowd into and spin up a pool service business. Yours it doesn't have that same geographic moat, but I feel like there's kind of a similar appeal to your business just because of the way you the way that your business is happily positioned, which is kind of the luxury option or the premium option. Do you feel like pool service businesses, yours and Ben's, are both seem to be exceptions to the rule? Do you think the category is appealing overall if you're not one of these exceptional businesses where you have some pricing power?
Well, let me unpack that a little bit. First thing I would say, and this is also what drew me to pools, away from landscaping into pools. I don't want to discount. You don't underestimate my guys, or there is a science to pool chemistry. Yes, it's not the level of HVAC, maybe at least in terms of certifications and things like that. But on our service guys, their knowledge is very impressive relative to your typical HVAC professional. And then on the maintenance side, there is a level, a standard that you can't just have. People have to be genuinely curious of chemistry to be good at what they're doing. So that, and that's also kind of what drew me a little bit away from landscaping, where, it may have just been, don't take this the wrong way, maybe I'm overgeneralizing, but a little bit more labor intensive focus and less, expertise driven. But I would also say...
Great clarification. Thank you.
Yeah. And then I'd also say, I do think we do have a pretty good moat in our market. But, to just dovetail to your point on, as it relates to the competition side of things, I see it every day. There are some single pullers that are content with their book of business. They've been doing it for a long time and they're good at what they're doing. But the most part, and I can't give you any stats on this, a lot of single pullers, they come out of companies like mine where they're like, they start to think about the revenue side of things, and they think, okay, well, I service about $100,000 of pools, like I can go out and make 6 figures. And then they don't realize like all of the other costs and, operational headaches behind it. And they might go out and they might be able to get, a full book of business for themselves, but it's very difficult for them to retain. I mean, without having the back office support of dealing with customer complaints, billing, as we talked about extensively. So, I mean, I've had, unfortunately it was during like very busy times this past summer, but like I've had single pullers just approach me like, just, we buy my route, just, pay me my salary that, I was expecting to get here, and let me kind of, get part of a bigger ship here. So, and then meanwhile too, like, it's also without those levels of support and operations in the back end, especially in a market like mine, customers don't have a lot of patience for that. So, we get a lot of customers that, may leave for a cheaper option, but they're boomerang, they come right back because all those things I mentioned.
To close out, let's just kind of talk, let's just kind of like reflect on your journey here, because you were a searcher who was at the end of his search, 2 years. You had one last, kind of run at this, and happily you found a business that met your criteria. You bought it, and here you sit. How do you feel? How do you feel about where you've landed?
You've also caught me at an interesting time. I feel great about where we are right now. And it's exciting because, we're just, so we, as I mentioned, we worked through that issue. Then we had to deal with like busy season, which we were basically at capacity, practically turning business away. So it was just hectic, constant fires. We didn't even talk about like, trucks being down, like roofs getting ripped off in a storm, like all these issues. And now phones have finally settled down, made some key hires that have made things a little bit easier. And now we're kind of addressing all the things that we found were broken, or the reasons why, like the business, I think that, frankly, I think that's why the seller sold it. Like he had basically maxed out the capacity of this business, and had been really kind of getting by every summer by the skin of his teeth. And now we can kind of, the management team and me, we are just like one by one trying to fix all the little things that had slowed us down, all the little bottlenecks, like upgrading our phone systems, making sure we're tracking leads off of paper, and, having like a more of a CRM process, some targeted sales. And now that we have now stopped. So my first focus was really making sure we had the right people. That was another problem we had faced over the summer where, we only get paid when we actually clean the pools. That's one of the downsides of going against a flat rate. But, so we didn't have enough people to beat the demand this summer. So we're staffing up. We also want to train them properly. We also want to make sure that people have the right attitudes. And now I feel like we're in a good spot there. Had a big key hire in the management role that's, he's really, really geared up and excited for upcoming season. And then, we've been working on the tech side of things. And so anyway, I'm just with, we've had a little bit of a chance to lick our wounds from the summer. And now we're, everything that we've laid out is starting to come together for what, our busy season kicks off really the first warm day of March. And then, I'm sure there'll be a whole host of other broken, things that we'll discover, issues that we'll solve next slow season. But so this is like the perfect, and I'm looking forward to next season. Like during my search, searchers would say, you want to shy away from seasonal businesses. I don't think we're that seasonal, but I do like this concept of having some time to reflect and to build, because during the busy season it's just nonstop red line.
Yeah, Jesse Sundquist said the exact same thing. Jesse, who bought a pest control business, actually, he was looking forward to the winter to be able to just have some downtime to reflect. It's kind of like in a seasonal business or seasonal-ish business, like pools, like pest control. Maybe it's kind of like the framework is like you work in the business when it's busy season, you work on the business when it's slow season, sort of thing.
Yeah. Really good. I love Jesse too.
Oh yeah, great. Oh yeah, right. You guys are of course in the WhatsApp group together.
Yes. And Chad as well.
And Chad Hildebrand. Not knocking you down one by one. I think I got 2 or 3 more to go in this group.
Those guys were super helpful to get me through that summer.
Oh, good. That's great. Well, by the way, why don't you just share a minute on being part of kind of a pod, a kind of WhatsApp group? You just said that it was really helpful getting you through that summer. Anything more to add to that, to the value of that? Do you recommend that to other people?
Oh yeah, I can't recommend that enough. I think if you're really going to go all in on search full time and commit to it, like you need to have a support group of people that are in the boat with you, because, I was fortunate enough to have a great network of friends that have a lot of great deal experience, private equity experience, and they're all very smart people, but it's a different animal, search and all the challenges you face. And we kind of stumbled into this group together. We were fortunate enough to see everyone, go from search to buying businesses, to, trying to scale them. And, everyone's by sharing all these challenges you face, you realize, okay, well, I'm not alone. Like, this is not a unique or crazy situation. And then everyone's, then you could provide support for others objectively. And, it's just been, I can't recommend it. If you're going to go through search, make sure that you're trying to build that network. I would focus probably your first few months on that, even before you start going out, trying to find people that are, and we're perfect strangers before we all met. So,
it's funny. I wonder, Ryan, if it should be like, when somebody's organizing their search. I mean, it's what you just said. There's kind of the typical ways that one might organize their search, get their CRM going, get their list of brokers that they want to reach out to, whatever, kind of like, get everything situated on the desk and then start. Well, maybe one of those things should really, that people should think about, is a pod, like finding a group of people that are doing this, that you can be in a WhatsApp group with or whatever. And, that's a big box you need to check before you launch your search. Easier said than done, but it's a nice concept. Ryan, so last question for you here. So you used the expression scar tissue on our pre-call, referring to, pre and post going through your summer and being locked out of your own books, as well as whatever other misadventures you had. How do you think about being an SMB owner and the ups and downs and surviving that and fetal position moments? Anything to say about that ever-present theme?
Yes. Yes. So I would say, and Chad said it better than I'll ever say it, because he's way more eloquent than I am articulate. But, when you're early stages of small business, you have all these issues that come up, and they're seemingly, and actually in probably reality, they're as existential. I'd faced that and, a few others, to be honest. But, as you start to get that feet under you, get the traction, understand how things are actually working, and people start hopefully buying in on what you're trying to do, all those issues that come up down the road, it's, it doesn't get your blood pressure nearly up. You kind of just move through it. But yeah, those first few months, especially, every issue is existential. And sometimes when you do have as existential issues that are material, like, you may not be as lucky as I was to get through it. But, after that, nothing's going to faze me. We basically...
Careful, Ryan. You sound a little overconfident.
Not going to wood. No, but and also too, it was a great blessing in disguise to talk about this with my wife a lot, because, at the time I was like, oh no, like I needed this person. That was the other big lesson learned. Like when you first buy a business, you need those people desperately, especially in a smaller business. And when you lose one, you think it's over. You're like, oh no, this is going to be it. And this was such a blessing for me, because I immediately had to dive in and learn everything, like bottoms up, like in the weeds, and learn the business, deep understanding of kind of how all the systems worked, meanwhile, like making mental notes of all the things that need to be fixed. And then also earning, I think, the respect of my employees that see this. And, so, but point is when you go through, you have to go through a little bit of those trials for you now to be a little bit more confident going forward. And a lot of those issues that you face are, a lot of blessings in disguise. For example, in this case, bookkeeper, still working together, contentious, and something happened like that now, it could have been way more detrimental. Whereas we kind of ripped the Band-Aid off,
It's an interesting and good point that you just made about how blessing in disguise, or maybe one of the positive byproducts of going through that particular crisis, was that, like it or not, when that happens, you have, especially if you're just transitioning in, you have an audience, and the audience is the employees that you've inherited, and they're probably watching very closely. They're not as aware of how deep the crisis is, or exactly what's going on, But point is, it's an opportunity, if you handle it well and you survive, it's an opportunity to kind of earn your stripes and earn in an accelerated way of maybe earning the respect of your team that this guy is competent and can work through crises.
Yeah. And well, back to your other point on that support group, that's why that's so critical as well, because to your point, like you have an audience and you can't, it's lonely, it's very lonely when you're in that situation. And then that group being there to support you, it could be the difference,
Here's a final question. What's the grand plan? Or is there a grand plan? Are you going to be the private equity acquirer here in a few minutes, rolling up this industry?
I'd be lying if I didn't say that was my intent going in. But I mean, my near-term goal is to own the Georgia coast. I think we have, a little bit of a honey hole in our market, and we're already all the way down to Jacksonville. So, and then I already have some inroads in Savannah. So just moving north, and yeah, basically, I think we could do. There's a lot more meat on the bone that we left this past summer in market. So I kind of want to get through another busy season. But if opportunity comes up on the acquisition side, route here and there, I'll definitely pursue it. But yeah, the goal is to grow. I'd like to get it, 3 or 4 times the size in the next 3 years, which I think is very achievable just on the Georgia coast. The other thing about that too is, as I mentioned earlier in the call, like what my motivation for going out on search was to control my own destiny. Now it's been a little bit of, I want to change the lives of the guys that work for me that bought into me. And in order for us to do that, it's like, we got to take it to another level. And so, I don't know.
To give them opportunity.
Yeah, exactly. I mean, everyone opportunity, but yes, like it's, I think I definitely see the appeal of, okay, just owning and operating a business, steady state. Like, yeah, like we could make more than a great living doing what we're doing right now. And, I feel great about it. But, now I'm even more incentivized to grow just because, the people that were, that kind of had my back,
Ryan, that reminds me in the 200th episode where I reflected on some things that I've observed, patterns that I've observed from so many episodes. I think you're hitting one squarely. Tell me if I'm wrong. That, many searchers don't get into this necessarily because they're seeking to have an impact on a group of employees. That's not, maybe they're aware that could happen or whatever, but it's not goal number 1 or even goal number 8. And yet when they then, to their surprise, they find that actually is incredibly motivating once they've been in their business for a year, really doing right by, not just doing right by their team, but having a really positive impact on their people. Is that an accurate characterization of your kind of trajectory?
Yeah, I'd say so too. Because I mean, you start to, the ups and downs of that. I'd say my biggest disappointments are people related. It's predacious customers, and then employees that kind of self-sabotage. But you kind of wear those ups and downs. So, when an employee gets stoked on a sale that they've done, or truly bought in, really wants to kind of strategize on things, I don't think it just gets you going, and you want to feed off of it. And you want to kind of, I don't know, deliver all the promise that you think is achievable. So I don't know.
It's awesome. Great, Ryan. How can people reach out? How do you prefer they do that if they have questions for you?
I guess you could just you hit my. I guess you did me on Twitter. I guess the SMB Quest, or I have I still have my search fund website up that I still use the email for, and that's Turner Point Capital. So, you love to talk to searchers or other people in the pool industry. I've been trying to call. I have a group of I'd say it's very informal of pool experts. So anyone that's in the pool space that wants to try to compare notes on best practices, I'd love to talk.
Ryan Doyle, thank you very much for coming back on, and congratulations on sticking through your search and getting something across the finish line and surviving being locked out of your own books and a sketchy bookkeeper and a very busy summer season and what looks like an optimistic 2024 ahead.
Thank you, Will. Yeah, I'm looking forward to it. I'll keep you posted.
Sounds good. I hope you enjoyed that interview. Make sure you subscribe to the Acquiring Minds channel below. We are now publishing twice a week, so tons of new interviews and stories to come. Stories that will help you along your own path to acquiring a business.